When we talk about key performance indicators, I think one of the leading experts that has talked about business management and who Matt has referenced several times, Peter Drucker, is famously credited with saying, "What gets measured gets done." And the inverse of that is if you can't measure it, you can't manage it. And so I think this is a really important topic for us to be able to sit on for a while, and for us to be able to look at the different things we can measure, what maybe conclusions we can draw from those key performance indicators that we look at, and then how can we impact the key performance indicators to make sure that we are able to thrive in the new normal. As we continue around the HVAC business cycle and we start talking about customer lifetime value and monthly reoccurring revenue, I just want to review real quickly. Last week, we introduced you to our vacationer, the prisoner, and the explorer. We're adding a new one into the conversation this time, the freeloader, and we'll start to look at the different customers and what we have. But so often we look, and Matthew is going to talk about in just a couple of minutes here, he's going to be talking about market share, which is a really important key performance indicator for us to be looking at and for us to be aware of. The more points of market share we have, in how do we grow that, how do we gain that, is a very important key performance indicator. But there's really two sides to the customer equation. One, there's the profitability that the business gets from there. And then there's the customer experience that the customer gets from the organization or your company that you're delivering to them. And that's where we can see in the different quadrants here, we have 4 different customer types, if you will. And we're going to focus on this a little bit. If we have high customer profitability and we have a great customer experience, many of you know, and for in our industry, the customers that fit into that category, the explorer, typically are the ones that have engaged with our company on a regular basis. They're always pushing us for new products and pushing us to innovate and find new services that they can purchase from us. And they're our maintenance agreement customers and the people that we have available. If we look at just the Explorer type customers that are out there, and what I did is looked at it over 12 years, you can see the different transactions that would happen over the course of those 12 years through the maintenance agreements, the service calls that may pop up through there, the different opportunities for upgrades and indoor air quality or maybe home automation equipment that we have available to be able to talk to them about why our technicians are there in front of them. And then the opportunities for preventative maintenance when we're out there on those performance tune-ups that we're doing, multiple times a year. If you take all of that revenue and you divide it over the course of 12 years, you end up with an average annual revenue of about $1,279. And that's an important number to look at. And if we had all maintenance agreement customers and they all stayed 100% loyal, that would be a very easy way for us to be able to measure our business and for us to be able to say, I'm going to go after just that customer segment. But we have different customers that we attract. We have to worry about customer acquisition. And we also know that we're going to lose a couple of customers every single year. So we have to keep filling up the funnel, so to speak, and keep replenishing that. And so I wanted to start off with a quick story. The Hoover Vacuum Cleaner Company in the UK, in the early 90s, their management had this great idea on how they were going to go ahead and gain more market share. And they came up with this great promotion or this great idea. They said, anybody that buys 100 pounds worth of Hoover equipment from us, we're going to give 2 free airline tickets from the UK over to Europe. And the promotion that they ran was wildly successful. They got a ton of participation. Lots of people were buying the equipment. And so they decided, we're going to double down on this. This promotion is just doing phenomenally well. And so they started a promotion that fall where they said, if you buy 250 pounds worth of equipment from us, we'll give you 2 free round trip tickets from the UK to North America. And their market share grew exponentially. They had more sales in the history of Hoover UK than they had ever had before. Unfortunately, that promotion cost the company 50 million pounds. The top executives were fired and let go, and we can kind of see the writing on the wall with that. They provided their customers very, very high customer experience. Unfortunately, there was very low profitability for the company. In fact, it was actually negative profitability that the company had, and they created a bunch of freeloaders. And so I want to get this clear. I'm not using any of these statements as a derogatory statement around the customer, but I wanted to understand that we're looking at the behavior that we create by the promotions or the different things that we have in the field. And so that's one aspect of this chart that we can look at. Another aspect of the chart is highlighted by a case study done with US Airways. In the early 90s, they had pretty much the whole entire market share cornered with direct flights out of the Washington-Baltimore airport. And they provided a product that was very profitable to the company, but it had a low customer experience for the customers. And so they had a lot of the vacationers, if you will, there that were paying to have these direct flights because they wanted the direct flights in and out of there, and they had a very low customer experience. Southwest saw this, and Southwest decided to start doing flights out of the Baltimore airport. And what happened was, over the course of 2 years, from going from the dominant market share position, US Airways went down to 2% market share out of the airport in the course of just that 2 very short years with Southwest Airlines coming into there. And so we have a vulnerability with the vacationers. If somebody can come along and offer a better customer experience, all of those customers are at risk.